All right, cheers and welcome everyone to Happy Hour with the Lincoln. We're now on episode number 47 and I have a question for you. Are you as happy to be watching this happy hour as happy as I am actually doing the happy hour? I mean, think about it. So as I said, we're on episode number 47. And if this is the first time that you're watching, or you're just watching out there in general, if you have any stock market related questions and you think they would be beneficial to some of these upcoming episodes, just send them over to support@thelincolnlist.com. And as I always say, if I don't feature them on any of these episodes, I'll at least get back to you and answer your question. Also, if you need help with your personal trading and you're ready to align yourself with a professional trading community, visit thelincolnlist.com. Right here's our live trade room and trade with us live. Now, we do have a good sequence of topics that we're going to talk about today, things that really deal with the psychological part of trading and overcoming those mental barriers. And that's where I'm going to start out here with question number one, which is constant setbacks. Doug, I'm having the same problem over and over. I'll go on a hot streak that can last for weeks. Then with one or two trades, I've destroyed weeks and sometimes months of winning trades. I know you said in a prior video it was the wins against losses, but my question is, why do I keep letting it happen? Each time it happens, take a big loss, I get more discouraged and I feel like quitting. It's like false hope that I can make it as a trader. All right, now this is a very good question. I think we've all been in it, and I think it might have actually been last week's happy hour or a couple weeks before. I talked about that win-loss ratio. It's not how many times you win on a trade. It's what's your average profit per trade versus your average loss per trade. Now we went over this, and I'll kind of touch on it just briefly. What usually happens with a trader, and why this question is on here, it's going to go into this topic a little bit deeper, is that the perception with us as people is to win, So sometimes we care more about winning. We care more about keeping a streak intact than we actually do about profiting. Now this sounds super crazy, and this is like heavy duty sabotage in the head, but you know what I'm saying. Have you ever been in a situation where you were up pretty good on the day? Maybe you had a bunch of lousy trades, or maybe a bumpy week. Let's just say it was just a bumpy week. You couldn't really get anything going. You nailed a few out of the open, and you were like, you know what? You felt good about it, and you felt, I'm just going to sit right there. And then all of a sudden comes by the most perfect trade setup you have ever seen in your life. Like, you haven't seen anything that looked this sexy in a month. But you pass on it because you don't want to mess up your win streak, or you're not prepared to take a loss, or it's just been a long week and you're tired. So when you're in a situation like this, first of all, when you're losing money, in a case like this, it's definitely the profit factor. It's your wins are just too damn small. We've often said in our trading room that small wins are really like losses. You're really in the thing to make money, and you have to focus on that. So there's a problem somewhere in there where you're cutting those winners early, whether it's because you think in your mind that you just want the W on the board and you want to book a profit and you feel like a winner and that's going to make you good. And then when a loser comes by, you just can't accept taking the loss. That could be a problem. Now, as you said, this really works bad on the psychological part of a trader, because what this does is it takes that very thin line between success and failure, because you realize that it just takes one screw up and you're blown out the water, right? So if you're going to win on 10 trades and then one is going to come by and blow out those 10, I mean, you're never going to make any money that way. It's going to be absolutely impossible, because you cannot expect yourself to be that perfect. So first of all, first and foremost, I'm going to answer it just like the previous question that I answered. When you get into a trade, and if you're a market technician like most of us day traders are, there's a specific target that you have in mind. That target's not something that you just drew up out of your ass and came up with a number, excuse my language, it's Friday, but it's a number that's relevant to the chart. You have to give it a fair opportunity to try to get there, because that's what you did. And I'm sure if you're watching this, whoever sent that question, or if you've had a situation like this, I'm sure you've been there, you've took money on a trade, and 30 seconds later, it went right where you thought it was going to go, and then you just kicked yourself, okay? You can't do it. You've got to give yourself the adequate time to work that trade. Now, how much time do you give it? Well, that's based on your technical analysis. What is your time frame of trading? I'm assuming that everybody should be getting into a trade with a specific stop loss in mind and a specific target in mind. And whatever that stop loss is, that target should be, in your mind, at least 2 times greater than what that loss is. So if you're taking a 50-cent loss, that means your target is at least $1 gain. If you're taking a $1 loss, that's at least $2. Okay? I think you follow the math there. You at least have to try to give it. Now, you will not get it in every circumstance. You will take a bunch of scratch trades. You will take a bunch of even trades. You will take small losses along the way, but you at least have to give it a fair shake. Now, if it's a chronic problem that's happening over and over again, you've got to get to the root of the core of why you look at yourself in this light as far as, why do I have to win? What's so important about me winning every single time I take a trade? So like, let's say for an example, you on a 10 trade win streak, right? And you don't want to take number 11 because it's such a beautiful pattern. You're afraid you're going to lose and mess up this streak. You have to ask yourself, why am I thinking that way? Why am I worried more about my statistics? Why am I worried about just getting a green W and saying I'm profitable? Why am I worried about that rather than trying to make money? That's a much deeper topic. It's going to take you longer to do it. There's something there. And usually what happens when traders experience that is you're not 100% convinced that the strategy that you're using is ironclad, right? We talked about this before too. You haven't back tested it enough. You don't believe enough in your process. So I recently mentioned, I think it was as well in a whiteboard, that I know over a span of 10 trades, I'll know what to expect. It doesn't matter what month it is. It doesn't matter what the market is doing. It doesn't matter what kind of economical climate that we're in. But if we take 10 trades, you take any 10 trades, spanned out, pick them randomly through all 12 months out of the year, and you'll probably find the same statistics with my trading. You'll find this is how many you won on, this is how many you lost on, this was your average profit, and this is your average loss. It will vary, but it'll be very, very close. Because trust me, what you can't get yourself into, the trap that you're falling into right now, and for those that are listening, the danger here is you will never ever make it under this kind of mentality, because that's exactly what happens. You're putting together consistency, you're feeling good about what you're doing, then you screw up. Now, maybe when we're talking about screwing up, maybe you're doing something that's not in that process. Maybe you're taking a revenge trade. Maybe you're gambling. Maybe you're trying to make something happen when there's nothing there. It could be a much deeper topic like that. But it's very difficult for a person to string together lots of consistency. You know, let's say you win 1, 2, 3 months and you're doing really good. And you're like, oh man, I got it. And then bam, a big loss comes by and then you got to start all over again. You do 2, 3 months. I know exactly what you're talking, and then it's back. It's like, you know, 1 step forward, 2 steps back. 1 step forward, 2 steps back. You can't live a life like that. You're going to have to really figure out what that loss, why you're having that loss, why you're allowing that loss to come by. Look at those losses and try to figure out where those mistakes are. Is it a revenge trade? Is it a trade on your process? Did you negotiate with yourself on your stop? And then on the flip side of that, take a look at those winners. So I would recommend that if you're suffering from this problem, next week when you go to trade, just get out a piece of paper and start writing down how many stocks went in your favor after you got rid of them. So did they actually make it where you thought they were going to? Write that down. And then every time you took a loss on something and stopped out, go back and look at it and say, how many times did I stop out and take a loss when I didn't need to take a loss? And I promise you, after doing that for a week, you will find exactly where your problem is. So remember, we say idea, execution, management. You probably have good ideas. You probably have relatively good execution. You're having a management problem, and that's what you need to fix. So I kind of went around the bush there, talked about a lot of things. I hope I kind of got direct with you guys there and answered the question. So we'll move on to number 2. Question number 2, hacks. Do you have any good day trading hack to help a brother out? Thanks, bro. Well, I'd love to help a brother out. I'm always willing to help my brothers and sisters out, but we have a problem. We have a big problem with this because I'm unsure what you mean by hack. Now, I see this all the time on the internet. Here's life hacks. There's iPhone hacks. Here's kitchen cooking hacks. There's just hacks everywhere. So I'm not really sure what hacks are. I'm thinking, just by what I read from headlines, it's like a shortcut or easier way to do something. I could be totally wrong. I don't think you're talking about like hacking a computer or something like that. But I've always said there's a right way and a wrong way to do something. There's not a shortcut, especially when it comes to trading. You're just not going to find a shortcut or, you know, there's easier ways that you can do things, which is mainly what we keep talking about in all of these happy hours, getting good training, trading small to begin with in your trading career so you don't blow up your account while you're trying to learn how to trade, focusing on the trade setups rather than the money and all that kind of stuff. Because as I've always said, it's very, very important, because happy hour is here to help you psychologically. It's really important to build those correct habits and not think about shortcuts and not thinking about what kills other traders' business. You're trying to build those habits so that later on down the road, you can make some serious money. And I've always said, if you do a lot of damage early on, like the very first question, if you've just constantly lost money and you start getting discouraged and you start revenge trading, it's going to be hard. It's hard to break it out. I mean, we've all been in situations throughout our lives where we get down. We get down on our luck, we get down on our life, whether it's finding a relationship, it's business, or life in general. And sometimes you just get in a funk and a rut, and it's hard to get out of. It is really, really hard. Just reading some damn quote on a book or a Post-it note or something on the internet just isn't going to cut it. It takes hard work. It takes an incredible amount of focus. And I don't even know if I'm answering this damn question. I could just be ranting. I've just been ranting. But I think you know what I mean. Let's just move on, because I'm not even sure what the hell a hack is anyway. But if it is shortcuts, no. There are no shortcuts. Just do it right. Get some help. Do it right. Follow a pro. And don't worry about making money. Just figure out how they live their life. How do you find your stocks? How do you live your life? How do you just do everything? It's a lifestyle. So do that. Question number 3, charts. Loving those videos. Been binge watching whiteboards all weekend. I know you did a video about different chart time frames. I know that each one is unique within its own right, but other than time itself, what would one chart time tell you that another wouldn't? If a 1-minute chart is breaking out, then it would be breaking out on a 10-minute chart because it's trading at the same price, correct? This makes time irrelevant. If trading is based on price, time should not play a factor. Am I missing something? Yeah, you are. So let's go ahead and talk about this. I think with Einstein's question here, I can answer this. Trading is not just about price. It's about price and time. So for example, if you're looking at a 1-minute chart and a stock is trading at 50 bucks, let's say it only has 3 bars to it. It's just going sideways, 3 of them. That's only that $50 that it's holding. You can look at that with your eye and say it's holding 50 bucks. Now you can look at that and say it's holding 50 bucks, but what does 50 bucks really mean? Is it just holding it for 3 minutes? I mean, can you confidently put your money down in size on a trade and say this is rock solid support because it held for 3 minutes, right? Can you do that? No. Now, if you look at that 50 and you go back further in time, let's say you look at a 5-minute chart and it's held for 5 minutes. Well, holding for 5 minutes is more solid than 1 minute, right? So holding for 30 minutes, if it held the thing for, let's say 1 hour, a 60-minute chart, it held the whole thing for 60 minutes, well, that's obviously more important than 1 minute, right? You have more data. You have more consolidation around a certain price. You have more confidence that 50 bucks is an important support. Now, if you could go back further into time, not just with minutes, but with days, weeks, or months. Now, let's say that same very chart was holding that 50, and you go back and you see that 6 months ago, $50 was a rejection point, that it was now making this longer term, 3 to 4 month double top. Well, you got yourself a different trade there. So yes, time does matter, because just because something breaks out on a 1-minute chart doesn't mean it's going to be breaking out on the 5 or the 60. But as I said, the rule is that the further you go back in time, the more important it is. So one of the things for us as traders is the price discovery and determining how important that price is. So if we go back to question number 1, when a trader is struggling to hold on because they're like, hey, I just want to take this gain. I think the stock's going to trade to $60, but I want the gain. If it's just some little 1-minute chart and it's kind of flapping around and it's not giving you solid support, it's kind of, giving you mixed signals, well, yeah, you take your gain. But if you're looking at something to say, man, this stock has tapped on $60, 7 times over the last 3 or 4 months, and here we are again. If this thing finally clears it, it's going to explode. It's not the same price because it's based on price versus time. I hope that makes sense. Why that becomes important, which you've probably already figured out, it becomes important to sizing, right? So let's say you're just taking a normal position of 100 shares on all these trades you take. Then this one comes along and you're realizing that you have 6-7 months worth of consolidation and you're about ready to break a 6-7 month, high, and maybe it is an all-time high with the stock. You're looking at a potential explosive event, an event that you're probably not going to see every single day of the week. So as a trader, wouldn't it be important to know that and position yourself accordingly? Because this could be that trade that turns it around for you. This could be a monster winner. This could be a move that is $5, $10, $12. Who knows? So the answer to this question is it does matter. Just because something's breaking out on a 1-minute chart doesn't mean it's breaking out on a 5-minute. Price is important, but price versus time is what's really important. Because when you're looking at that number, you have to distinguish yourself. Why is this important? So if you're owning a stock and it keeps going down and you're wondering, when do I bail? And then you get down to 7 months worth of support and it loses it, you can't make excuses for that stock anymore. You're like, it's been going down all the time and we're finally losing a very important support level that the thing spent 6 months trying to hold. That's a big deal, right? You see what I'm saying? That's a huge deal in the way that you go about trading. So I hope that kind of answers the question. Remember, it's not just price, it's price versus time. So when you're trading, the next time you're trading, before you make that trade and you have that target in your mind, the resistance to or the support where your risk is, take a look at those numbers. Just take one or 2 seconds to look at those numbers and see where they match up somewhere else. Just go back and say, how important is this? Am I looking at some cheesy intraday garbage support, or is this real? Is this something I can get behind? Because that's what I'm looking for. I'm not looking to scout for pennies. I'm looking to, slay the dragon here, and that's what I want to do. So I hope that answered the question. And as always, I'm going to wrap it up because it's Friday, and I'm getting out of here, and I'm going to do something with my life tonight. Maybe continue a little bit of the sipskis. Anyway, if you have questions, you know where I'm at. Thanks for watching. Until the next happy hour, cheers.